Good morning and welcome to this test conversation we're going to have. It's the first time we're trying it, so do give us a shout if there are any problems with the technology. I'm joined by Peter Williams this morning, but first of all we'll start by having a quick look at a couple of charts if the technology allows. So if you just bear with me 1 second, we'll pop over to the charts, and the first one to to quickly look at is just looking at the Zoopla data showing the reopening of the market. And obviously there's been a lot of estate agents and listing websites talking about the boom in activity, lots of people looking at properties, lots of people getting in touch with agents, but inevitably the actual amount of transactions is taking a lot longer to rebound. And having been down at about 10% of previous levels, the Zoopla data suggested activity was around 30% of previous levels, whereas there was some Rightmove data that was suggesting it was maybe more like 50% last week. So it does look like there is activity returning to the market, but inevitably there's an awful lot of questions about what might happen going forward. And one of the big ones that's in my mind is the availability of mortgages. And the Bank of England published this chart a few weeks ago now, looking at the collapse in particularly higher loan-to-value mortgages. Now, inevitably, the inability of surveyors to be able to access properties will have played a part in it. But although there have been some news releases about the reintroduction of higher loan-to-value mortgages at 95%, the number available still appears to be very, very low. And the final chart is just looking at the nationwide house price index, and this is just comparing the trend over the year compared to the last few years. And actually the start of 2020 had been very, very strong. House price growth looked to be set to hit 5% or more by the year end, but following the data just the other day, that has now collapsed and is looking much, much lower and is likely to go lower still. And so on that, I'm just going to cut over to Zoom now, and hopefully we can bring Peter into the conversation. And I will get a lot smoother at this. There we go. So hopefully that didn't quite work. There we go. Okay. So Peter, good morning.
Good morning, Neil. And I think just to follow on from that, obviously the key point about Nationwide is, of course, there's this mortgage offer data. And obviously, given the current state of the market, there is a constant negotiation between the offer price and the completion price. So even though Nationwide is pointing to a 1.7% fall in offer prices, based on a relatively small sample as far as we can understand, what we don't know is what the completion prices will be. And we can only imagine, on the basis of information from people like Zoopla and Rightmove, there will be a negotiation now between the two parties, buyer and seller, as to the final price.
Absolutely, and it won't be helped by the comments from the chief exec of Nationwide the other day that they were expecting a 14% price fall. And I would assume that is going to feed through into both the attitude of buyers and sellers, but also of mortgage lenders themselves. And where the data is still emerging on the economy, and we had a lot of former chancellors warning about the high rates of unemployment, and so inevitably lenders will be very, very nervous about lending into this environment.
They will, and I think, it clearly we've got this gap between what people are saying about the market. We've obviously got a little bit of data from HMRC, which has pointed up to this very small number of transactions that have actually taken place. And that process is going to unfold slowly. So I think we're still at a stage really in terms of prices that we don't quite know how severe prices will go down. I think we can agree that. We don't quite know how that's going to work through, how sharply they will go down and for how long. Everybody, I suppose, is looking at what happens when furlough ends and unemployment starts to rise. And the question then is, what impact will that have on the housing market? And I think that's internationally, they're all referring to that as the cliff edge, as where effectively the big impact starts when government support mechanisms drop away. The market is on its own. My personal view there is that cliff edge will be more managed in Britain than it may be in other countries because of previous experience with housing market downturns where we've managed down the impact of them.
Absolutely, we really learnt our lesson in the early 90s, didn't we? And it was clear from a lot of the policy interventions last time around in 2009-10 there was a lot of action to try and minimise the impact of particularly forced sales on the market.
Correct, and we're still, of course, in a position where evictions are banned. So the fact that you can go onto a payment holiday right up until October, you can still go end of October, you can still trigger your 3 months and potentially 6 months. So the span of people potentially on payment holidays is going to stretch out into next year. The ban on evictions and logjam in the courts is going to presumably take us through into early next year. So the growth of arrears will be managed, I think, by lenders towards the end of this year and into next year. Forbearance will apply, loan negotiations will continue, and therefore the impact in terms of forced sales onto the market, I would only imagine we'll begin to see in mid-late 21.
So we're in a period of waiting to see what happens to the economy, the housing market, and then the knock-on impact. And I suppose the danger is during that period we could see some very strange results coming through in the various measures of the housing market, from house price indices to transactions. And
yes, I think that's right. I mean, I think April was 46,000 sales, which is about half of what it was in March and half of what it was in April 2019. And we can only imagine that April, May will be even lower. And presumably will only start to pick up really in June onwards. So the numbers actually coming through, and the numbers are completely transacted. I think the key point in the Zoopla release was this point about 40% of people had abandoned their inquiry and actually withdrawn from the sales process or the purchase process. That process of customers stepping back from potential mortgage offers, from potential purchases, will, to my mind, continue at least over the next 3 to 4 months, given the uncertainties that exist.
Absolutely. So it appears that for the time being, a lot of mortgaged homeowners are probably fairly well insulated from the immediate pressures. So that suggests that the big danger in the short term is from other parts of the market. There's been a lot of talk about Airbnb, stress in that kind of market. The student housing market looks particularly at risk at the moment, given the uncertainty about how many and when students will come back in the autumn. And the city centre new build market could be an interesting area with.
Yes, I'd agree with you, Neil, and I think there are 2 points I'd stress here. One is perhaps early impact is in the buy-to-let market, where, I mean, tenants are probably the most under pressure, and therefore the issue of rent payments coming through to landlords. Landlords are on payment holidays, but of course, many landlords are on payment holidays. Started in March 23rd. They're almost coming to the end now of the payment holiday period, unless the lender has agreed a further payment holiday. So that may already start to bring some pressure to bear on some landlords. I think the other effect that I would highlight is with the banks' limited access to the term funding scheme, we're going to see quite a significant impact in terms of reduction in high LTV mortgages for not least the self-employed and first-time buyers, who probably both in a sort of non-prime category. They're going to find, in the absence of non-bank lending, they're going to find mortgaging much more difficult. And I think as a as a part of that, what lenders will be doing is not only have lenders stepped back from high LTV loans, but they've tightened the income assessment, and particularly around bonuses and overtime, because obviously people are saying coming forward, those may be put pressure points, and therefore lenders will take a tighter view of how much, what percentage of overtime or a bonus is actually built into the mortgage agreement. That will be a tighter restriction, along with fewer mortgages. The upshot there will be, therefore, people's access to the mortgage market will be tightened.
So that suggests we may be seeing something akin to a return to the pre-2013 market in terms of access.
Yes.
Much
yes.
more, access is limited
yes.
to people who have higher incomes, more secure incomes, and have access to bigger deposits. And so,
yes. And I think using your analogy of 2013, I totally agree with you. And obviously in that downturn, the government came forward then with its mortgage guarantee scheme and its mortgage rescue scheme. Now, the numbers on both were relatively small. Mortgage rescue played its part. Obviously, people then become tenants rather than owners. But the mortgage guarantee scheme, although the take-up, it was quite an expensive scheme, although the take-up amongst lenders was relatively small, what it did trigger was encourage other lenders who didn't take it up to return to the high LTV market. And I think this time round, again, a reviving of the mortgage guarantee scheme would be a good way forward.
Yeah, certainly my understanding of it was very much the signal that mortgage guarantee sent rather than its actual how it worked in practice. And part of that was the government almost explicitly saying, look, house prices are going to rise from here on in. We're taking
yes
risk
it's a statement
here.
of faith by government, isn't it?
Yeah. And we're probably, given your earlier comments about the timing and when we're going to see the stress, are we at a point yet where government can seriously make that statement just yet?
No, and I think, of course, the trouble with government, frankly, is that all government departments are snowed under with a myriad of requests about X and Y that they should or shouldn't do. And the question really ultimately in this is where all of these things fit. For example, within the stimulus package the Chancellor may announce, where will housing sit? Housing does have an enormous multiplier effect in the economy, is a very quick stimulus measure, but it may be there are other things that are more important.
Absolutely. And I suppose that there are more important areas within housing at the moment than the market itself, particularly around private renters and social renters. And some of the stories and statistics, it was bad before this we entered this period, and inevitably this will be putting further pressure on them.
I think that's right, Neil. I think, however, the politics of this are important, and actually, if the Prime Minister and the government want to, if you like, return to business as normal, some feel-good factor in the home ownership market is probably quite high on their list. I mean, they certainly espouse great concern about private tenants and social tenants, but I suspect in heart of hearts, in their reaching down into the tool bag, home ownership will not be far from the top.
Absolutely. It's been the priority for the last 10 years now.
Yeah.
And I expect that to go. I think, shall we leave it there? I think it's kind of a very brief run through of the market, and hopefully we'll get a bit smoother with some of our technology transitions in the future, but hopefully we can make this.
It's good. It's worth doing it. I mean, the whole group could play into this sort of structure.
Absolutely. So hopefully we'll be inviting all the members of BuiltPlace to get involved. So
I mean, an obvious one, Neil, would be thinking about future markets, the kind of discussion we've had with Yolanda and others about urban, suburban, rural property types, etc., getting some debate around what may be emerging from all this in terms of behavioural patterns.
Absolutely. And so, if for the few people that are watching today, if you want to get in touch with the contact details that you should be able to see on YouTube, give us a shout and let us know what you'd like to hear us talk about, and hopefully we'll see you again soon.
Very good. Goodbye.